Let's get to Elias Sabo, who is CEO of Compass Diversified, and who joins us now to discuss a little bit of what's going on. Elias, nice to see you, sir. Just tell us, do you listen to every word the Federal Reserve members say and just pore over the ramifications for portfolios?
No, Steve, thank you for having me on this morning. You know, we look directionally where the Fed is going to be moving monetary policy. Right now, it feels like we're in a loosening phase. We're seeing impact on our companies already. I'm guessing that it's filtering through to psychology, both with our business customers in our industrial segment and also in our consumer companies, where we're seeing some increased buying. But we don't really follow it that closely, other than to see where the broad trends are going in a either loosening or tightening fashion.
Yeah, depending on their penchant of the day and whether they're long or short, there's a lot of market participants trying to talk down the US economy and US businesses, Elias, as well. Well, actually, everything I see at the moment is it is remarkably robust, way better than people expected when we saw this historic set of rate hikes over the last couple of years. I look at consumer credit figures yesterday, revolving credit down, really solid numbers as well. We should be very, very careful not to talk down the consumer, not talk down businesses in the States. And I think there's a danger of doing so at times.
Yeah, and you're 1,000% right. We've seen the consumer hold up remarkably strong all year. I want to give you some data because I always think that brings everything home. We have what's called the CODI Momentum Index, and it is, a pretty accurate gauge of not only where the company is now, but what we expect in the next few months. In the first quarter, our consumer companies had a momentum index of 1.14. That increased in the second quarter to 1.18. In the third quarter, it just finished at 1.21, and it ended the quarter at 1.25. So that to me feels like a steady accelerating consumer, not one that is weakening. And our industrial businesses, which had a negative momentum index for most of the year, at the beginning of September, changed and went from negative to positive. So it feels to me like the economy is more robust than what people are saying.
Let me ask you about inflation then, because I gather you believe that it is coming down. This is what the Fed is expecting as well in terms of its guidance. And obviously with the jumbo rate reduction, it's clearly less focused on inflation now as it's worried about the growth story. But in recent days, we've had escalating events in the Middle East that's driven up the oil price. We're counting down to a US election where we may see more trade tariffs if it's a Trump presidency. Is it a given that inflation's coming down? Are you worried about a wild card scenario?
Yeah, Karen, I would say there has been a strong trend in disinflation that has been happening for well over a year now. And those forces remain in effect. Now, could oil price increases, if they were to stay for a long time, impact inflation and make that go higher? Of course. And could there be, trade policies that added tariffs? Of course, those are inflationary. But what we see present conditions today is that these disinflationary forces remain intact. And I would say one of the things that for us is, the leading indicator of really how bad inflation is wage pressures and availability of employees. And we've seen wage gains now moderate back to what is normal. And frankly, our productivity is picking up substantially with all of the automation that continues to happen. And so our unit labor costs are coming back to a very normalized level, and they are not at inflationary levels. So to us, it feels almost like a Goldilocks scenario. The economy is picking up, inflation continues to come down, and I think that's why equity prices are hitting all-time highs.
We're certainly hearing a lot about Goldilocks at this stage. I want to get into some more specifics around the consumer, because your brands are fascinating. They have a touch point with so many different consumers, one being insulation for some of the luxury and athleisure wear companies, as well as baby wear names or baby carriers. What are you seeing in terms of the trading down, where consumers are reluctant maybe to spend money on something that had a fairly hefty price tag that they just simply bought in the last couple of years versus trying to find, say, even a substitute at a lower end now? Are you seeing any of that behavior?
We do not see any of that behavior at all. In fact, our brands are positioned as premium to ultra luxury brands. And we have found that the more premium positioning of the brand, the stronger it's performing right now. And you mentioned Primaloft, which is the insulation brand that works with really the premier partners in outerwear. And our brand stands for environmental sustainability and consciousness. And a lot of our partners, that really is important for them. That's one of our strongest performing brands right now. And some of the outerwear products that we're going into are jackets that are $600, $700, $1,000. And we're seeing that business pick up with our partners, stronger than any of our other companies right now. So I think it bodes really well that the consumer continues to hold up and there is not a trade down effect.
Yeah, look, your business specializes in getting money to middle market businesses, and that's kind of your shtick as well. Do you find that this obsession with investors and people wanting to chase the AI, chase the growth of technology as well, does that give you more opportunities, or is it a barrier to getting the money to where you want to see it?
No, it's, Steve, I would say that the number of opportunities, unfortunately, have been limited, not because of, a secular shift into technology and capital flowing in that direction. It really has been a lack of opportunities. The M&A markets in the United States have been absolutely moribund over the last couple of years. Fed tight policy, coupled with now, increasing and expected and, recession risks. Although I think that's completely wrong and that the economy is strong, there's this narrative that a recession may be coming. And I think that has really dissuaded sellers from wanting to come to market. And we've just seen almost no activity. So, we're in a position with a very strong balance sheet, tons of capital available to make moves as the market opens up. It's just the market has been really slow for the last couple of years.
Elias, very good to catch up with you again. Thank you so much for running us through the latest that you see in your business. Much appreciated. Elias Sabo with us, the CEO of Compass Diversified.